Good morning, everybody. Welcome to the Flow Show. Hope you're doing well. Morning, Kay. You all good?
Morning, Ryan. Morning, everybody. Yeah, we're okay, mate. We're okay. Patience is a virtue, huh? Because we are going to need another 9 hours or so, is it, of it, or 8.5 hours of it?
Direct investment news from Germany.
Yep. So treading water again. There are still some trading opportunities about.
Yeah, it's a bit going on.
Yeah, still just to keep the accounts ticking over. So we'll share our thoughts on the FOMC. So we'll get all the headlines out of the way quickly this time, or as quick as I can. Anyway, China has room for another RRR cut, or rate cuts this year, as well as an RRR cut, says the China Securities Journal or Securities News overnight. However, that doesn't extend to the LPR, which they kept unchanged as expected overnight. The NDRC, the National Development and Reform Committee Vice Chair, said economic positivity is increasing, though the recovery will be treacherous. China consumer prices are likely to rebound as demand recovers. The economy is likely to continue its rebounding trend. Now, a comment out of the PBOC's head of monetary policy department said we should pay more attention to the yuan rate as an FX basket rather than one particular pair. It's going to correct a deviation and stabilise market expectations. That's the PBOC's job. We've got to start watching a basket now, have we, Kay? Another one.
Yeah,
knock us something up.
Yeah, they're actually their fixing is already based on a basket, right? So I guess everybody's already watching baskets all around. But yeah, I mean, the thing is, there was a lot of chit chat on the from officials overnight, of course, after them keeping the LPR unchanged. I mean, the bottom line is they still firmly want to keep the FX in check and really keep control over everything. And that's where we are now, trying to keep the speculators away, I guess. But we have to note that every day it seems that it's a bit of a yo-yo, but starting to creep up again, right? This dollar China. So yeah, and I think overall they're okay around here, but I guess they are going to get more vocal or actually even intervene or so if it goes above their 2%, which is actually not too far from here. I think it's somewhere in the high 731s. On the day, yeah, they may just keep an eye on it, but the officials will not stop talking because they really want their economy to get back into shape, and at the same time keep speculators away. And yeah, so we can expect them to babble and try to massage different headlines every time they talk, probably. So yeah, I'm not reading too much into what they say on a day-to-day basis for as long as there's no real actions anywhere.
Yeah, it seems the sledgehammers are staying in the tool shed for now, as far as currency intervention goes. If they really wanted to hit it, they could hit it, but they're choosing not to at the moment. But an ongoing situation, which, as you know, we've been monitoring daily. Over to Japan, and the currency diplomat or currency chief Kanda was out saying the usual waffle. Excessive yen moves are undesirable. Watching FX with a high level of urgency. Will take appropriate steps as needed, not ruling out any options. Then did add that they're closely communicating with the US and other overseas FX authorities. Now, there's a couple of things in that. Firstly, this was a guy who dropped in speculation at his last bout of jawboning. That's not in his comments this far. But the communicating with the US and overseas FX authorities also was nodded to by US Treasury Secretary Yellen, who said that the Treasury generally understands the need to smooth out volatility in exchange rates, but not as long as it influences Forex levels. Any view on Japanese yen intervention would depend on the circumstances. Now, being no doubt, these guys are talking every day pretty much on what's happening in FX markets and whatnot. They all know what's going on with everyone else. As far as Japanese interventions going, they will probably give the heads up, or they'll know soon enough when Japan intervenes. It won't be too much of a surprise for all those in the know if they do. But just some comments there that they do all talk. Now, Ali's just asked a quick question about BOJ intervention. I said that they will not intervene. They need liquidity to intervene. No, it's not liquidity. It's volatility. That was the key point we were lacking when Canada came out with those speculation comments. It's the volatility that is important to them. If it's moving 200-300 pips a session a day, that's too volatile. That's when we're one step from intervention. They don't really care about liquidity per se. If they want to hit it, they'll hit it, and they'll phone up their agents, their banks, and send the commands out, and the job will be done. So it's not really a question of liquidity. Technical help, I'm not sure what you mean by technical help. If you mean help as in their agents and banks do the job for them, yes, they'll get that help. But it's not really help, is it, Kay? It's just here's our order, go and do it, Kay.
Yeah. So the usual thing that happens when they intervene is that they likely will call up their agent banks to check rates. That's the last warning, and you usually see dollar yen drop a quick 60-70 pips and likely crawl back up, but then that's usually the last warning. If then the market doesn't turn around, they probably intervene. But yeah, they do it they can do it via various ways. They can call up the agent banks and just ask them for prices and sell. They can ask the agent banks just to go into the market to sell. Then they can, depending on the time zone they do it, they can also do it with the help of ECB and the F.A.C.E, who then calls up banks and sells, whether it's dollar yen or in the case of the ECB, likely the euro yen, but then they sterilize the euro afterwards. So they have various ways of doing it. I think they over time also got access now straight to the electronic platforms. They used to have it already when I was still making markets, but they never used it to actually trade, just for monitoring purposes. Then I don't know if there's anything new there, but yeah, they do have various ways of intervening. The MOF gives the green light, or the order, I should say, to the Bank of Japan, and then Bank of Japan trades on the orders of the MOF and do their stuff. So yeah, there's various things that they do. They can have like a kind of fixed amount. They can have like rates they're watching. They can have yeah, I mean, a kind of time they intervene for half an hour or so, or they can just go sit on the offer. There's different ways for them to intervene, as I've experienced in the past. So what they did last year is just hit the market and then sell large enough for the market not to get back up to rates, especially when they intervened the last time above 150, and then afterwards they got some help from the US inflation. But yeah, there's various ways that they can intervene. There's no panic on whatever means they have or amounts they have to intervene. They're still sitting on about $1 trillion of FX reserves, so that's not going to to be a big problem right now. So yeah, that's about it.
Yeah, thanks, mate. Now, Bloomberg were out with a piece saying that BOJ speculation moves to negative rate policy from the yield cap speculation, which is probably about right considering your readers' comments last time around. That's what we're expecting, or I'm expecting, for the BOJ on Friday, that we perhaps get some clarity on those comments from him as to whether he meant them as the market took them or whether the market took them wrong, and it was just potentially one option of many that may happen if things all go according to plan. So that's Bloomberg highlighting what we already knew over here. On the data front, we had some trade balance data. Again, if you can't really take the numbers in this too much. It was down 66 billion last time. It's now down 930 billion. What is important, though, is the activity numbers. Further losses in exports and imports, further negative numbers there. So, that's a sign of activity coming down. So it's not really good news, but this thing flies around, this trade balance. So I'm not going to pay too much attention to it at the moment, but the continued negative numbers in the imports and exports, if they continue, then maybe that's something that will be affecting the economy going forward. But for now, just wishy-washy on those numbers a bit. Coming over to Europe, and the Bank of Spain has raised its inflation forecasts, a bit worried about higher oil prices. So they've upped their forecasts there. Germany, PPI data, which, where is it? Can't find it. There it is. No, it isn't. There it is. Bit hotter on the month than expected, but matching the year-on-year expectations, minus 12.6%. We know that German inflation has been a little bit stickier, but the PPI coming down now, at least on a year-on-year basis, shows that some of those effects may start to wane a bit. The SNB, or rather the Swiss government, sees 2023 inflation up at 2.2% and 2024 at 1.9%. So 2023 forecast still above the SNB target, and that's got a few people thinking that that perhaps nails a hike that's expected this month. Do you think that changes the picture at all? That inflation?
I mean, it's the Swiss government giving the green light to the SNB for tomorrow. That's how I read it, because the actual numbers are not above 2%. If I'm correctly, I saw wasn't Swiss inflation just under 2% already? I need to check it. I'm not.
Yeah, I think so. Was it 1.9 or something?
Yeah, I don't know. Let's see, Switzerland. Okay, I'm going to look it up.
Yeah, you check it. Yeah.
Sorry?
I say you check and I'll waffle on if you want.
Yeah, no, that's fine. I'm going to check it in the meantime. Yeah, so it does give the you see, the last inflation rate was at 1.6%. So I've got it already in August. Yeah, that's giving the green light to the SNB to do one more, and I think SNB comes out tomorrow before we do the show, right?
Yeah, 8:15, I think.
My view there is that they probably will do the extra one, and that's still going to put the Swiss rates only at 2%. What I am really looking at in the SNB, well, regardless whether it is their meetings or whenever they talk, is that it's at some stage they're probably going to give us the nod saying that they're happy with where things are. And that is probably meaning that they will not continue to incessantly buy Swiss franc, because that's the big thing really that happened once the whole process started, is that they said that they would buy Swiss franc to combat the inflation as well. I'm just waiting for the moment where they give us the nod and say we're happy with where things are, and then I think the Swiss franc could actually quite rapidly weaken a few percent. They will continue to probably say, we are keeping an eye on it and we are going to stand ready, blah, blah, blah. But I think there is going to be a case where, yeah, take Euro Swiss, which is probably the cleanest of the trades, where it is bottoming out. And I think we're really in those low 95s, high 94s. I don't see too much of a reason for it to really go much lower than that. And I'm waiting for a signal of their from them to say like they're happy with things right now. Could it be tomorrow? Could be, because they only have a meeting every quarter, right? So they need to choose their wording wisely. So that's what I'm going to look for in the SMB decisions and statement tomorrow. But in the meantime, as you say, the government is giving the nod to the SMB though, to go ahead, in my opinion.
Yeah, thanks, mate. Right, coming over to the UK, and the CPI data came out much softer than expected. Headline inflation was expected to rise 7.0, 7.1%, depending on who you were looking at. Came in lower than last month, 6.7%. The core as well coming in lower than expected, confirming a drop there. Now, not too much of a surprise for those of you who've been following the Flow Show, because we've been saying that inflation from last month was going to be the tipping point, and it's continuing again. So inflation going the right way. PPI as well going the right way, not down as much as expected, to only 2.3% loss there versus 2.7 expected. On the input side, output side as well, not a bigger fall as expected, but still going down. Small gains on the month. So CPI and PPI roughly going the same way. What is the concern is this RPI. This is the retail price index. It's more, it's another form of core, if you like, but particularly on the retail side. So it includes all the food and whatnot stuff going in through there. That's still very hot, running in the 9%. So that's going to be the concern. There has been quite a bit of chatter from various circles thinking that the drop in CPI might be enough to tip the BOE into a pause tomorrow, and to keep their powder dry for any shocks further down the line. According to trader pricing, there's now a 70% chance of a hike tomorrow. It was 90% before the data. The rate probabilities is pretty much 50-50 on whether they hike or cut. So there's been a big dovish shift in expectations, a bit like we saw with the ECB moving to hawkish expectations into the meeting. Well, this has gone the other way. The OIS curve shows that rates going past 5.5%, expectations have dropped. They're now below 20%. They were running around 42% prior to that data. So I don't think it changes the needle for tomorrow. I still think they hike. I think the pricing 25-30% of rates staying unchanged is probably about right. It will still be a risk if they it will be a shock if they do keep rates unchanged, but I expect them to hike, and we'll probably get a strong signal that they're back on pause, or if not done, talking that rates are restrictive language that we heard from the ECB. I think maybe the risk for tomorrow will be the votes, that they come. We expected 8-1 for a hike. I think they might be a bit more marginal. I would go maybe 6-3, and it's just to send a message that they're done, or they're close to being done. At the most extreme, maybe a 5-4. That would also indicate that they're done. So they can use those votes to send that message. In theory, if they all agree that they're one and done, then an 8-1 should pass. Vote for the hike, but as I say, they could change those votes just to give the message that they are done on that. So that's what we'll be looking for tomorrow. But we can jump on all of that tomorrow. Coming quickly over to the US and data yesterday, bit of mixed fortunes. We had the housing data out, which was soft on the housing starts, down some over 11%, but we're up on the permits, which are up just under 7%. So it's a little bit mixed. Housing starts, for those that don't know, permits is obviously the application to build houses. Starts are when actual ground is broken on that. So why this suffered a bit, I'm not too sure. I haven't seen that much commentary on it. Maybe it's going to show some weakness. Having a permit and then putting the costs into actually building might be a factor. So it could be a financing thing. Maybe the demand's not there for housing, it's dropping off. So we need to keep watching these numbers now, particularly the starts numbers. If that starts trending lower, then we've got some problems in the housing market, which we know isn't looking overly hot again, considering the NBA data that we get weekly. Negative mortgage applications week after week after week with very few bounces. So that's been raising a bit of awareness that we might see some softening, but that's something we need to keep an eye on. Canada inflation.
Ryan,
yeah, go on, mate.
Yeah, what we need to take into account as well if we look at those housing starts, I think is the weather as well. Was it not like extremely hot in one part and some flooding in other parts? And I think those numbers can be, and especially due to climate, be a little bit erratic and volatile. So I guess we need to take several months in a row. And actually, it's quite funny, but I mean, it's just a detail. But if you look at the importance that some people give to those numbers, and they put the permits importance above the housing starts important, I thought it would be relatively the opposite. If you look at what the reality of things are, you can ask for building permits, but as long as you haven't dug the first hole to put in the foundation, is it really worth 100% watching those permits, right? But I think we need to be a bit careful with housing data right now, just because of the climate, really.
Yeah, it's funny enough because I looked into that data because I was wondering if there was any skew, across the country. There didn't seem to be. There wasn't like one area that suffered more than another. That was one of the things I looked for. But you're right what you say. Building permits, it's one of those things. It's almost like capex, if you like. The intention to start building. If that's strong, then it suggests that the demand is there. So it's one of those funny numbers that can look okay in one sense, but then you match it off against the starts, and maybe it isn't such a good indicator. But you know what market commentators are like; they'll spin it as they want to spin it any which month. But you're right. We need to watch if this becomes a bit of a trend, and if it does, then it's going to flag some other issues. But then, as I say, moving on to Canada CPI, and much hotter than expected, 4% on the headline number. Core measures going up as well. The BOC core going up a pip to 3.3%. All these other 30 ways to count it going up as well. So it was a little bit suspicious because we saw dollar CAD dropping pretty much, the latter part of the morning coming into the US session. It was going all the way down already, down towards that 134 that we were looking at. Let's clear that up a bit. So remember that 134 was a big level we were looking at, and it was down to the teens when we got that data. So maybe someone had a little sniff of the numbers beforehand, because after the knee jerk, we bounced back up. But it is significant for the BOC because inflation, just taking the headline, it's gone from 2.8, then it went to 3.3, then now it's gone to 4%. That's a pretty hefty move up in inflation. We already know that the prime number turned the BOC a bit more hawkish. This isn't going to change that. It's probably going to add to that as well. So we need to watch those expectations. It's likely to keep dollar CAD on the soft side. We've seen a bit of a bounce today, but we're still holding below the break point of that zone. And as you can see, we tapped it and it's held. So technically, broken level is showing up as resistance, which is going to keep the pressure to the downside for now until we get above there and 135. But yeah, definitely going to keep the BOC on the front foot regarding inflation, and that was borne out by BOC's Kazicki speaking overnight, saying that they are prepared to hike further if needed. Inflation remains too high and broad-based. Seeing evidence that demand is slowing from the recent tightening. The ups and downs of CPI data is not that unusual, but one of the big drivers in the August CPI inflation was energy and gasoline prices. They can be pretty volatile. It will take a lot of time to sort through the inflation data given what's going on underneath. So Canada's suffering probably from what a lot of countries are suffering, this uptick in gasoline prices. However, a lot of people are pointing to the rally in oil. That is no way coming through so quickly into inflation. There's a good lag, 3 to 6 months before it starts coming through. Yes, gasoline prices get hit fastest, because if the price of oil goes up, price of gasoline goes up pretty quickly. But for the rest of it, there is a definite lag. So we're not going to be seeing all this oil price rise reflected in inflation just yet. That'll be a potential problem down the line, depending on how long and how high oil prices stay. Excuse me. Right, a couple other little bits. US Senate Majority Leader Schumer said House's GOP's proposed stopgap funding bill is not expected to pass the Senate. No shit, Sherlock. And White House's Kirby says the US wants to reopen military-to-military communication with China. We'll see how that goes. On the oil front, last headline that I've got, apparently, according to reports by Bloomberg, there is one oil firm that is driving the price higher in oil, and that's France's Total Energy. They say that they're buying up because there's higher refining margins and a little bit more robust demand. So they're the ones who are driving the price up in oil, although we have seen it top out just short of that zone I was talking about, 93s to 94s. So a little bit of a pullback there. Maybe they've done buying, who knows. Right, that's it from the headlines, unless you got anything you spotted with your microscope, Kay?
No, mate. I mean, all the rest is more like opinions and stuff. No. You've covered it all.
Cool. Beans. Right. Let's get on to the Fed.
Oh, yeah. By the way, gold must not be far from the top, from its top, because JP Morgan said it could go to 120 and Goldman Sachs above 100. So we probably have seen the top.
Oh, well, oil.
They probably need buyers now to take them out of their loans.
Yeah, I think who was it? Kramer as well. Jim Kramer was saying that there's a top in oil, so that's probably on the other side. We probably are going to 100. Who knows? We shall see. But quite a decent pullback anyway. Right, the Fed, the big one today. I've got a feeling it might be a bit of a boring one, unfortunately. We should still get some decent market moves. I still think there is a bit of a risk that they do hike, but I'll put that still, 25-30% chance of them hiking. Not as much as I'd put on the ECB last week. In theory, they should, or Powell should, walk the same middle ground that he walked last time, noting the risks, noting the strength in the economy, making some subtle changes to any weaknesses in that point, noting inflation and whatnot. I think the overall message is that they're prepared to do more, but are happy to wait and see how things unfold. He'll push the message of the higher for longer because they don't want to undo all the work done so far. What happens with the dollar is a little bit more mixed. You know, if they do hike, it's going to be a shock. But then in a similar situation to the ECB, that's probably a one and done type hike. So any rally in the dollar might then reverse pretty quickly. If they remain unchanged, then again, the comments probably won't give much room for the dollar to weaken too much, unless another hike is further away than what the market believes currently, and still penciling in November-ish for the next hike, a lot of the market. So if that looks like changing, that might put in a bit of a dovish slant to it. What is going to be important is the dots. And the reason the dots are going to be important because, again, it's about conveying that message. So it's going to be really important. Forget the 2023 dots because we've only got a few months left of the year, so that doesn't matter too much. It's going to be the 2024 and 2025 dots you need to concentrate on. Currently, the low end of the dots, and I should be knocking this up while we're talking. Currently, the low end of the dots, or the lowest dot, is at 3.75%. The top end is around 5 3/4%, I think. If you give me a second, I will get up the dots and you can all see what I'm talking about. There we go. So that's the current dot picture. So 3.75 at the low end, 5.75 at the high end. The majority in this sort of 4 to 5.25% mark, 4.25, 5.25% mark. So if they want to keep the message, they stay unchanged and want to keep the message that rate hikes are going to stay high for longer, you'd be looking for a bit of a step up, maybe of these guys here around the 4, 4.5s. If they step up more around the 5, let's say we get the majority sitting around 5, that'll give the hawkish slant, or at least be reaffirming to the market the higher for longer message. Likewise with these 2025s, this might be a bit messy. As you can see, it really is split, a wide range, no majority for any one number. This might, if that takes the same sort of shape as this at a high level, again, that's a little bit more hawkish. And also you can look at the longer run just to see where they think the neutral rate might be. That might be stepping up a bit. If that steps up, same sort of pattern, but if that steps up from here to sort of 3%, again, that will have the market doing a bit of a repricing where rates are further down the line. So the dots are going to be important, but I'm expecting a same old message from Powell. How about you, Kay?
Yeah, exactly. I think rate-wise, they won't change anything. It's like we've been saying that so often, it's a bit of a broken record. I think it's going to be data dependent, rates on bit on autopilot right now, and then it's going to depend on what they say, and also QT running in the background, which I think actually is partially responsible for the yields being kept up, apart from those treasury and debt concerns. But yeah, I think the important one, especially for the 2024, I'd say, because the market is pricing in those cuts. What I could see as a base case is that the height of or the difference between a bit of more of a concentration towards the top side of the 4% range, as you say. I think we can see a bit more concentration in the dots, which would then mean a bit higher, which would then mean higher for longer, right? I don't know if the 2025s will already be important, but I think if the 2024s rise, the 2025s would perhaps mechanically be adjusted as well a little bit. If you hike your expectation for 2024, you're probably going to hike it for 2025 as well, perhaps not in the same to the same extent, but that's it. And yeah, I'm trying to think what the dovish. Well, okay, the dovish surprise would be we are done, okay, but he's not going to say, he's not going to tell us that, because that Powell has been walking the fine line very well, actually. and that reflects somewhere in where we are in the dollar right now, globally speaking. So I think, yeah, watch those dots. And as you say, I don't think it's going to be a game-changing FOMC meeting today. That's basically my view. And I'll show it when I take the screen. That's the option market view as well.
Yeah, yeah, cool. Ali asked if the Fed is hawkish, can we see 150 on dollar yen? I wouldn't rule it out. There's two ways to look at it. If they hike, but they're done, what you're going to have is two things. You're going to have aftermarket, who now has got a little bit more on the carry trade between the dollar and the yen. So there's a reason for them to jump in on that. But then probably the rest of the market is going to be trading. That's the top. When a rate cuts, let's watch growth, similar to the ECB, and likely we're going to see a dollar reversal. So can it spike up there? Yeah, of course. Will it stay up there? That's a different question. And I think it's hard to see that happening unless the carry traders really come piling in. And in that case, then maybe we are heading up there. Yeah, go on, mate.
We have to wait for the Bank of Japan to know whether the carry trade is full steam back on.
Yeah, if he
now we are speculating on if the Fed does this and dollar yen shoots to 150, what's going to happen? But that's not over to the Bank of Japan. That's over to the MOF. If they think that it's going too fast, remember Kuroda when he said moves of 200-300 points per day are too much. And we already had the warning overnight by Kanda saying that they are keeping an eye on markets. I don't think Kanda meant anything else than to say he didn't mean we are ready to intervene. He told the market, we know that FOMC is tonight, Bank of Japan is on Friday, we are watching you. That is the message. So if we see an abrupt move in dollar yen on the back of the FOMC tonight, I reckon the MOF could step in and say like, hey, hang on a little bit here. We are going to do something. And then it's over to the Bank of Japan to tell us whether we are going to go back onto the carry trade. We will talk about the Bank of Japan, but it could be, well, any meeting now of the Bank of Japan is important, but it could be a relatively important meeting coming up here because of what Ueda may tell us. So I think it's too early to say that, I mean, this is going to, I really would like to take FOMC and Bank of Japan as a whole to know exactly what the yen is going to do.
Yeah, very much so. I mean, if they hike, as I say, I can see dollar yen spiking. Can it hit 150 maybe? But then I would potentially be looking at that getting sold off. But then you get to the Bank of Japan, if Ueda rolls back on those comments he made last week and brushes them down, dumbs them down a bit, and obviously they remain unchanged in all their policy stance as expected, then you're probably going to see dollar yen rallying again, and that might be the real move, because that will be okay. Now we've got what 5.5% rates. Sorry, what's the rate? 5.25%, 5.25%, or 5.5%, 5.75% rates in the US if they hike, and that's a bigger divergence then from the Bank of Japan. So and that'll bring the carriers out. So you can't just judge it on today. Ali, is the too long didn't read version of what myself and Kay have just been saying. Right, let's have a quick look at the prices. Kay, do you want to have the first look at it?
It's as you wish, mate. I guess we are going to be looking at relatively the same pictures. Yeah, let me quickly show you this then. So what we are looking at, and we have this funky widget on our page, on our ForexAnalytix page for the guys in the room. Always good to have a look at what the option market is pricing. So we're trading around at 107 on the euro, and look at what the options market is trading. This is the overnight, okay? This is not what they expect to be around, but this is what you're going to be paying for a straddle. You add up the both plus some spreads that you're going to pay away as a retailer. So 51, let's say 55 pips is about the same that they were pricing over the ECB. So the market doesn't think that the Fed is going to be a big thing today. Yes, there's a bit of volatility priced in the overnight because we have the event compared to what the 1 month is. This is normal to see this, right? But you can judge by how nervous or relaxed the FX options market is, which is a pretty deep market, by the way, on how they price the event. And the event, you price it to take the at the money where we are now and see what they price around the event. So 55 pips. If you would buy a straddle, that means that you're looking at a range, possible range of 107.5, 106.5. That would be the boundaries. And as we have seen pretty much over the past meetings, apart from after the ECB, we had a bit of a move lower than where they priced it. But the options market has been pretty accurate over the past events, okay? So keep that in mind. If you're looking for moves after the event, that you likely are going to be finding interest both sides of this of the range. And you add both up, that means that 106.5, 107.5 is likely going to be the boundary of the range today. And if you look at it, there's not a lot of difference. There's no skew. That's the blue line here, which is current. There's no skew. So the market is not really thinking that is going to be a game changer one side or the other. If you look at the yen, for instance, there's a bit more of a skew for the top side, okay? And it's priced at around 70 points, which is about the same actually as in euro dollar. So no big dramas there on the expectations for the FX market for the today's event, okay? And if you look at, for instance, I'm just going to front run the Bank of Japan just a little bit because this is interesting. If you look at it, just changed, okay? So the market here is also looking at where is also thinking that the Bank of Japan is not going to change much. So the skew is a little bit for the top side. So the market thinks that it is possible that well, you have a little bit of a swap in there as well. But it's possible that the Bank of Japan is not doing anything, or Ueda not giving us anything, so they're ready to pay up a little bit more for the top side. That's a bit of option stuff for you guys. Yeah, just quickly, euro dollar, yesterday's high around 107.15. We are not too far from it. That's the first level. I think if we start to get up to those higher 107s, in the current scenario of how the dollar and the euro behaves, I reckon we would find some resistance. We would find resistance up there. It's really if we start to break 108 that the picture is going to change for the euro, I think. If not, then we trade ranges. I also don't see too much of a reason for this FOMC to take it sub 106.35, but therefore we will have to watch what the yields are doing. They are ticking up those yields on the dollar. They are ticking up everywhere, but on the dollar in particular, when it's the biggest market. And then, as usual, you have to look for the euro dollar at what the short-term differentials are doing post FOMC. If we get a disappointing FOMC, then the differential should be tightening, and then we will have to watch very carefully what's going to happen around minus 170 to minus 165 BPs, okay? All things equal, Powell being, I think he's going to be very neutral. I reckon this is not going to move too far away from where we are now. I think maximum back down to 190 BPs from 180. That's roughly what I'm expecting from the today's moves. Well, we have to look a bit. We have to look at dollar CAD because we have a little of a theme thing going on. A theme thing going on dollar CAD after last night's yesterday's CPIs, most of us actually bought this dip into 134 and just below. I've been already offloading quite a little, not quite a bit, about half actually, of what I have on. For as long as we are not going above 134, call it 3/4, 135 the figure, we still have to think that this thing here could be on for a break back down. So I'm trying to be very careful with what I'm doing, at least here. If it goes below 133, 3/4, 70, I guess there's no reason to keep that dollar cat. But in the meantime, keeping an eye on what's happening in oil as well. Distant eye. It looks as if we found some decent support here, at least. And now it's over to the FOMC to tell us what people want to do with this. I'm thinking that I might misunderstand this market a little bit, because I've started to catch a knife here in the dollar Noki. I'm going to load a bit more up in this zone here, down to 1070, 1072. But if it goes below 1068, I'm probably going to be out of it. I thought with oil starting to come off, natural gas coming off as well, that we should have a little bit more support for the dollar Noki or euro Noki. But perhaps the market is already trading tomorrow's Norges Bank, that which is expected to raise by a 1/4 point as well their interest rate. So one to watch. Thought it would be a good idea to buy into this zone, but I'm starting to doubt myself here. So I'm going to play it very, very cautious, keep my amount small, and that's where we go from here. Dollar yen, yeah, I need to talk about cable quickly. Look what happened on the CPI. We came to tag this this trend line here in the 123.30s. That's your support right now, and I think we can extend it over the FOMC tonight if the cable turns south again, to down to 123, the figure where also the prior low is. So this level is going to be important on the FOMC today. Okay, this is going to be important. Very short term, perhaps the level yesterday, but then I would rather look at the 124.5 as point of measurement on the top side. If we start to go above 124.5, I think then cable could trade higher, and that would perhaps mean that Mr. Powell gave us something rather dovish to chew on. I'm a little short here, but I'm not going to be a hero, so my average is pretty okay. If this goes back above 124.5, I'll be gone. And what else? I don't know. I don't really know what else to talk about. The dollar yen is just slowly ticking higher. We are above the prior highs, but FOMC is going to decide whether we go to 148.80, 85, or if it's a straight line to 150. Again, we have said with Ryan, and I kind of agree, because if you print close to 150 on the FOMC, I think a few officials are not going to be happy, and we still have the Bank of Japan to come. So caution, if we would go very close to this level, I'd say. For as long as we are, on the other hand, trading comfortably above 147 for a starter, nothing has changed in the global picture. It's still pretty big. And that's it for me, Ryan. Over to you.
Thank you very much, mate. I'll just grab it back quickly. Excuse me. Just to go back to a point Ali was making about a bit of a bias. And Angela quite rightly said, you know, you shouldn't really have a bias going in, you know, a feeling about what there may be. You can have feelings, but you don't want to let them influence you too much, or if you're going to trade those feelings, know where your risk is, know which side of the trade you're on. What if it all goes wrong? Don't plan on what can go right, plan on what can go wrong. But Ali also mentions that he's got a, why should he fear big events if he has a 50-50 trade probability on each? Why do you fear a risk event? There's two ways to look at that. One, there's almost a higher chance of your 50% wrong coming up over a big event because there's bigger price risk around such big events. If you've got a 50-50 trade on, risk reward or however you want to call it, and when there's nothing going on, you've got nothing really to affect that. But when you've got a big risk event, there's two things. A, there's a higher chance that one of your 50s gets hit, and law of trading averages suggests that if you're on a 50-50 on a big event, you're probably going to be wrong more than you are right. But also, you have the risk that if there is a big move, your first price is through your stop anyway, and so you get a worse stop than what you had in the first place. If there's a sudden gap in a pair, your 50% or your one-to-one risk reward or whatever could get blown out the water because you get stopped at a far worse level than you had originally set. That's why a lot of people, and I do, and I know Kay does and others do, they scale down any trades going in. If I'm long dollar yen 147 and 147.66, we're up here at 148s. I'm probably going to scale down my 66s into the FOMC. I might even take them all off. I'm happy to leave the 147 part on because I've got a bit of margin to play with. I don't have to react so quickly. So I might just reduce that risk. I may be wrong in doing so, and it may shoot up to 150, but I'm all about managing my risk because I've got an equal chance of that going down to 147 and I have it going up to 150. So I don't want that risk. I'd rather take my money off the table, lower my risk, just manage what I've got at better levels and better margin, give myself the time to adjust the trade if need be, or stay in or even add back. You can always add back after the event if you still like the trade. There's nothing wrong with doing that at all, but it's all about just managing your risk. And that's what you see with a lot of traders doing. This is probably going to get really jumpy closer to the FOMC. Longs will be exiting, shorts will be exiting, and you'll probably see it flapping around in a 30-40 pip range just while traders do that. Just take chips off the table. That's all you've got to be careful about. Anyway, as far as we're concerned, the talking is done. Obviously, you can catch us on the F.A.C.E show and for subscribers, the other shows during the day in the run up to the FOMC, which we will all be covering live later in the chat room. So good luck today. Stay safe. If in doubt, stay out. Come back afterwards. Pick up the trades once you know how things lie. Take care, everybody. Thank you very much, K-Man, for all your thoughts, and good luck to you as well over the FOMC.
Yeah. Good luck, everybody. Have a good day.
We'll see you all.
Don't do anything what I wouldn't do, but don't put your account at risk. It's not worth over one meeting, okay?
Yeah, exactly. There's
day,
always another trade. Cheers, everyone.